$45 billion for spices. I didn't realize mayo and paprika commanded that kind of premium.
44.8 billion, Nate. And it's actually a brilliant structure. Unilever builds a $20 billion flavor monopoly.
Brilliant? Oh, come on. It's a total defensive panic buy. Just like Paramount scooping up Warner Brothers after Netflix walked away.
Wait, you think Netflix bailing makes Paramount the sucker there?
100%, but first we need to talk about the spice aisle. The rundown. $33.4 billion. Just say that out loud. It feels good.
It feels like GIP and EQT are flexing. The AES Corp deal is massive, but it completely proves the point everyone is making right now about this K-shaped recovery.
Oh, we are doing alphabet shapes for the market again.
I am serious. Look at the data. You have these well-capitalized giants doing absolute mega deals, but the middle market is totally flat. The big kids are just trading castles while everyone else is stuck in their starter homes.
Speaking of trading castles, Cintas is buying UniFirst for $5.5 billion.
Pure consolidation. Uniform rental is not exactly sexy, but the synergies there are painfully obvious.
I just love that some junior banker got to build a pitch deck entirely about corporate laundry. You know, they used a washing machine graphic for the cash flow slide.
I guarantee they did. I want to talk about Legrand, though. They just picked up Kedak in China and TES in Europe. Data center racks and power supplies.
Which is just another AI play. 1/3 of the largest deals right now are citing AI as the primary driver. Lattice just bought Mandala for their AI coaching platform. Everyone is just slapping AI on the press release because it is practically a requirement to get funding.
No, wait, those are fundamentally different. Lattice buying Mandala is an AI software play. Legrand is buying the physical metal racks and the power cables that keep the servers from melting. That is actual infrastructure.
It all trades on the same hype cycle, Maya.
Disagree. You can fake an AI coaching algorithm. You cannot fake a power grid. Legrand is playing the picks and shovels game. It is way smarter.
Fair point. Though if we are talking big splashes, Zurich Insurance just dropped $10.8 billion on Beazley.
Massive specialty market play.
Huge. But honestly, none of these numbers compare to the absolute circus in Hollywood right now. Paramount Skydance officially won the bid for Warner Brothers Discovery.
Only because Netflix abruptly walked away from the table. Which is wild to me. Did they see something toxic in the WBD footnotes, or did they just want to make Paramount overpay?
Classic stalking horse move. I bet Netflix never actually wanted to buy linear television assets. They just wanted to run up the tab for the competition.
Brilliant if true.
Speaking of running up the tab, we need to talk about what is happening in the grocery aisle.
Yes, $44.8 billion for a flavor powerhouse. Tell me about Unilever and McCormick. The big one. $44.8 billion for spices and mayonnaise. I am staring at the press release and I am genuinely trying to make the math work, Nate.
You are looking at it completely wrong. This is not just about mayonnaise. This is Unilever finally waking up and realizing their food division is a dinosaur. Getting McCormick makes them a $20 billion global flavor powerhouse overnight.
A flavor powerhouse? Did you pull that phrase straight from the sell-side pitch deck?
Fully guilty. I am a sucker for the packaging. But the logic actually works. Look at the broader market right now. Analysts are calling this a K-shaped M&A recovery.
Right. The well-capitalized buyers are doing massive mega deals while the middle market just sits there doing nothing.
Exactly. The middle market is flat. So if you are Unilever and you have the balance sheet, you do not buy 3 little regional brands. You go hunt an elephant. You buy McCormick.
Okay, I agree they needed a jolt. Their organic growth has been miserable. But nearly $45 billion? McCormick is a great company, but Unilever is paying an absurd premium. I read the footnotes on their projected synergies. Half of this valuation relies on cross-selling Old Bay seasoning into European markets that barely know what a crab boil is.
Oh, come on. It is way bigger than Old Bay. McCormick owns the entire grocery aisle. French's mustard, Cholula, pure vanilla extract. Unilever plugs those premium labels into their global distribution network, and suddenly margin expansion is a cakewalk.
It is never a cakewalk. When has a $45 billion consumer packaged goods merger ever integrated smoothly? You have two massive, deeply entrenched corporate cultures colliding. I give it 18 months before an activist investor forces Unilever to spin the whole thing off anyway.
I strongly disagree. I think it is a brilliant defensive play. Private label brands are eating everyone alive right now. If you do not own the absolute top-tier flavor profiles, you get crushed by the supermarket's own generic brand.
Top-tier flavor profiles. You really are speaking fluent banker today.
I spent a decade in those boardrooms, Maya. I know how they justify the multiples, and honestly, I respect the aggression.
It is not aggression, it is desperation. Unilever cannot innovate internally, so they are buying innovation at a massive markup. It is the classic lazy acquirer playbook. I just cannot get past the visual of some London executive trying to explain the strategic enterprise value of Frank's Red Hot to a room full of skeptical shareholders.
I would pay good money to sit in on that presentation.
I bet they tried to tie it to artificial intelligence. Everything is AI now. I saw a quote this morning that AI is cited as the primary strategic driver in roughly 1/3 of the largest corporate megadeals. Did Unilever claim their new garlic powder is AI native?
Do not give them ideas. Next quarter, they will rebrand as a machine learning condiment platform.
If I see the words algorithmic ketchup in their next regulatory filing, I am walking off the show.
We will put a pin in the condiment tech space for now, because while Unilever is making a massive play in the grocery aisle, someone else just pulled off an absolute heist in Hollywood.
Are we finally talking about Skydance and Warner Brothers?
We are, because Netflix abruptly walking away from the deal table changes absolutely everything about this merger. Voices. I saw a note from the analysts this morning officially calling this a K-shaped M&A recovery. The well-capitalized buyers are doing massive strategic mega deals, but the middle market is basically flatlining.
K-shaped. I love when economists run out of ideas and just start drawing lines. But they aren't wrong. Look at the board today. Global Infrastructure Partners and EQT dropping $33.4 billion on AES Corp. That is the upper arm of the K right there.
Exactly, and Zurich buying Beazley for almost $11 billion. The capital is there if you have the right asset. But the other quote making the rounds is the wild one. Experts are saying AI is now the primary strategic driver in roughly 1/3 of the largest corporate transactions. 1/3, Maya.
Oh, come on. I am calling absolute nonsense on that. 1/3? No way.
You don't think AI is driving the bus right now? Look at Lattice buying Mandala.
Lattice buying an AI coaching platform makes sense. That is actual tech. But 1/3 of all mega deals? I think bankers just learned to hit Command F and replace the word synergies with artificial intelligence in their pitch decks.
Ouch. As a former banker, I feel personally attacked. But also, you are totally right. We did the exact same thing with blockchain 5 years ago.
Exactly. I am seeing industrial and consumer companies claiming AI is driving their mergers. Give me a break. Don't tell me Unilever wants McCormick for $45 billion because of a generative AI spice algorithm.
Wait, really? You're telling me McCormick's Old Bay seasoning wasn't invented by ChatGPT? My whole worldview is shattered.
It's a tragedy, I know. But seriously, the real AI play isn't in the buzzwords. It's the infrastructure. Look at Legrand quietly buying up data center power specialists in Europe and rack manufacturers in China.
Which ties perfectly into what we are watching for tomorrow. The energy and tech sectors are bracing for accelerated deal timelines just to power all these new servers. Plus, private equity is getting very hungry to take public companies private again. Spill the tea. I am still completely obsessed with how this went down. Netflix walking away from the Warner Brothers Discovery table at the 11th hour, pure theater.
Theater? Nate, they looked at the linear TV debt and ran away screaming. It wasn't a strategic masterstroke. It was panic.
Oh, come on. You don't think Netflix was just playing poker? They drove the price up, made Paramount Skydance sweat, and walked away clean. That's classic banker playbook right there. Make your rival overpay for a melting ice cube.
I read the regulatory filings. Warner Brothers Discovery has $40 billion in debt. Netflix didn't need a playbook. They needed a calculator. Skydance winning this bid is like winning a burning building.
A burning building with Batman in it, Maya.
Okay, fair. But still on fire, and now Skydance has to figure out how to integrate all that legacy cable baggage.
They have the capital, though. This whole thing perfectly captures what analysts are calling this K-shaped M&A recovery. The middle market is just sitting on the couch eating popcorn while the mega buyers are throwing absolute haymakers.
Exactly. The volume of middle market deals is totally flat. But if you have cash, you are buying the world right now. Skydance takes Warner, GIP and EQT are teaming up for a $33.4 billion run at AES.
Don't forget Zurich Insurance dropping $10.8 billion on Beazley.
Right. It's massive check after massive check. And wait, did you see the stat about artificial intelligence?
That it's driving a third of these mega deals? Yeah, it's the magic word to get your board to approve anything right now.
It really is. Though I doubt AI is the reason for the absolute monster of a transaction we need to talk about next.
True, because if you think Hollywood drama is spicy, wait until you see what Unilever is trying to pull off in the grocery aisle.
$44.8 billion of literal spice. Hand me the McCormick financials. Ari, tomorrow's radar. Similar hit.
I'm keeping my eyes glued to the private equity space tomorrow. This global Infrastructure Partners and EQT tag team for AES Corp, $33.4 billion. That's a massive take private play.
See, I think you're looking at the wrong end of this K-shaped recovery. Yes, the PE mega deals are flashy, but the real story tomorrow is the AI infrastructure scramble. Legrand just snapped up KeyDAC and TES in one breath.
Rack manufacturers and power specialists, very sexy, Maya.
It is when AI is driving a third of all mega deals. You can't run the Paramount Skydance merger on hopes and dreams. They need servers.
Speaking of Paramount, I still can't believe Netflix just ghosted the Warner Brothers Discovery deal table like a bad Tinder date.
Right? Just completely vanished. But watch the power grid filings tomorrow. That is where the actual money is moving.
Fine, I'll read the Legrand footnotes tonight. Send me the links.